The pattern for stocks into year's end. Hi, it's Charlie giving you today's video. I'm recording this on the 7th or 8th, I think it is, of September. And because sometimes I have to do recordings in advance of them going out. So if you're looking at my chart here thinking, Charlie, the market isn't there, that's because I'm recording this a while ago. So what we're going to look at today is the what's the pattern going into year's end. Now, right now, there are a lot of stories going on. The market is a constant narrative and a developing narrative. So why, I'm recording this, as I said, on the 8th of September. The stock market's just fallen away a little bit. Just in this past week, we had this the falls coming into early August. And then, let me just bring this forwards again, actually. Then we had this mighty rally in the S&P and the Nasdaq and the Dow. Dow made new highs, S&P not quite as yet, and then we've fallen back over. Okay, so what's the story going on? What's the underlying narrative? Well, one of them is growth. So there's a growth story at the moment. So there's question marks around global growth, what with the slowing Chinese economy, but also question marks with regards to, well, can the US sustain the growth that it's had, and is it slowing? We've seen certain economic reports over the last month, 2 months or more, which are conflicting. We have some reports which are fine and others which are not so fine. So growth has some question marks around it. And in line with that, we are about to enter the first phase of the Federal Reserve cutting interest rates. And the stock market, I believe at the moment, is questioning whether we're going to get a 25 basis point cut or a 50 basis point cut from the Fed on the 18th of September. So those are some, and I think the stock market is a bit concerned that we only get a 25 basis point cut because the stock market wants bigger rate cuts, bigger rate cuts, lower interest rates for firms and businesses, and for consumers, of course, as well, which means more money basically in people's back pocket. Okay, so the Fed will put in there as well. And so this is the main narrative. And then I guess you've got valuations as well. Of course, these are where the market's just starting to get a bit more volatile. But we were expecting volatility coming into this period as well, because valuations, and there's this little thing, the election. Okay, so there's question marks galore at the moment. We've got valuations, our stocks, certainly certain stocks anyway, some of the big AI tech stocks, have they got a bit overvalued? So there are questions around that. And of course there are question marks on who's going to get into power. Is it going to be Kamala Harris with the Democrats, or is it going to be Donald Trump with the Republicans? So elections always create uncertainty too. Now so that's the story that's going on right now. All of the news and all of that around all of these various aspects of growth, stock market valuations, what the Fed are going to do, and of course the uncertainty with regards to who gets into power in the election. Okay, so let's get into the charts a little bit more here. First things first, and I think it's really important to point out, is that even at this point of me recording, the S&P is up 13% for the year, which is still historically a great return, even after pulling away a little bit just in this past week. It's been up to about 18% or so. So it still had a good year so far. Now, historically, in election years, what we've tended to see is you get into September, exactly like we're seeing already, and there's a bit of uncertainty in the stock market for whatever reason. A lot of the time, it's the stock market's starting to look out to whoever is going to be the next president. So the uncertainty around all of that, and so the stock market tends to do some form of pullback seasonally. Going back historically, we tend to see a a weaker time. Not always, and I'll talk about that in a moment, but we tend to be see a weaker period coming into September, October. So it wouldn't be out of the question to see a weaker period coming into September, October, and then bottoming usually late October or early November. Remember, the election itself is early November. I think it's around the 5th, 4th. And then we see a rally going into year's end. That's the historical norm for election years. In fact, let's now have a look at the seasonals for just some of the stats here for the month of September, October. Now, this isn't including election years. These are just the seasonals, because there's a lot of people talking about right now the seasonal patterns here for September. So historically, the S&P, going back to 1964, has a negative return on average. But there's a percentage positive of 45%, which means it's actually only 55% of the time that the S&P is negative. So you have to switch it around, and you can see that actually there's been some very strong months of September historically as well. So we have to sort of take it into consideration. Yes, there's been some major, I think that was probably during the year of 87 that we possibly had that, but at least we know that, yeah, okay, the overall averages for September, it is the weakest month historically, but it does not guarantee that it's going to be. Like I've just said, it does mean that it's only just over 50% of the time that it is actually weak. It's just that it's got that negative number because, again, coming back to this, because of the bigger drop. Where's that? September, here we are. Because of the bigger drop here, it's acting as a drag. It's a bit like, as you can see, for August, overall flat historically, because if they have, some of these months have these big drops. I mean, look at October, massive drop, but that was 87. But a lot of the time, stock markets bottom in October, and by the time you get to the end of October, they've bounced. So not surprising that actually October, although historically we've had crashes in October, we have a lot of market bottoms. Just go and look at recent years. So anyway, that's just one number there for you. Another one is just to remind you that the S&P has had positive returns in 83% of election years. So the odds favour that the S&P has a positive return. It's not guaranteed, but again, the odds favour these things. Okay, so the way that I'm generally looking at this is for now, and again, we don't have to just keep selling off really hard. It's not to say that we couldn't, but certainly this period now, September, October, could just mark maybe a bit more range bound. The market marks out a range and then starts to then move up into the latter part of the year. So that would be my base case there, based on history. And I'm just going to go with those probabilities that that may well be the way that things play out. Now, of course, in any one individual year, anything can happen. Like we've already said, there's some question marks around US growth. We've seen some reports okay, some reports not so good. If the Fed in just over a week or so's time from me recording this, if they just go with 25 basis points, which it could well be that that's all they do, could the stock market get upset by that? The stock market likes to bully. So the stock market might have a tantrum if that's all they do, and certainly at the moment that's where the stock market's already having a little bit of a wobble in anticipation of maybe we're only going to get 25 basis points. We're not happy about that. The Fed might be behind the curve, and therefore, and what I mean by that is the stock market might have a worry that 25 basis points isn't enough, and therefore by the time we get to the next Federal Reserve meeting in November, if there was a further deterioration in more from the economic numbers, then the Fed are going to be behind, and then they're going to have to play catch up a little bit as far as rate cutting is concerned. So putting it all together, I've now taken us out to a monthly chart. I think it's important to understand the overall performance. Looking at the monthlies, the S&P has had a fantastic run since making those lows in October of 22. We've had this overall a really good run. Same with the Nasdaq, same with the Dow generally as well. We've seen the DAX in Europe making new highs just in the last week or so, but everything's just come off, in the last week or so. But that's what happens. And so we are historically into the weakest month of the year, historically speaking, September. And in election years, we're in a more uncertain period as far as stocks are concerned, September, October. So it could well be that we see a continued pause between now and October, but then I would be looking out for a rally going into the end of the year. Now, one final thing to note is that is what has happened historically. You always have to be mindful of the potential for the stock market to not do that, and there are two ways that it could not do that. One is the stock market sells off faster and harder and does a larger correction downwards, and then we end up finding that the US economy going into 2025 at some point enters some kind of recession. So that's always a possibility, and there's a lot of people talking about all of that. It's a possibility, it's not a guarantee by any stretch at this stage. Also, one other thing that we always have to be mindful of is the stock market. This could just be another little wobble, generally in the short term here, and the stock market goes higher. In fact, I've seen historically presidential election years whereby the stock market has in fact gone higher into end of September and October. It's actually gone higher. So we have to leave that on the table as well. But as far as the pattern itself is concerned, taking the news and all the stories and the narratives and putting them aside for now, the historical data suggests that this should well be a weaker period of uncertainty. When I say weaker, I have to be careful, not necessarily having to pull back massive amounts, but some form of pullback or consolidation. And then once we get closer to the election, then the stock market, either just before it or a bit after it, the stock market tends to turn up. So the odds favor a positive year for 2024. We'll see how it does play itself out, but I'm going to be staying with this playbook generally with regards to the markets, accepting that we could go into a period of underperformance, but certainly I would be looking personally out to that November time once we get past the election, and then seeing how it's all looking in that regard, because the playbook favors, the historical probabilities favor that the stock market will be up at the end of this year, and in fact whatever happens between now and November, that there should be some kind of rally November, December. So we shall see. Hopefully that gives you some food for thought.